Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com, your leader in pure technical analysis, avoiding all that Wall Street hype. Today, Tuesday, August 19th, 2008. Well, number one for today, folks, I want to first focus in on what exactly is going on with commodities and what's exactly going on with the markets, because as of last Friday, In The Money Stocks had called for a Monday, Tuesday decline in the markets and a resulting increase in commodity prices, and we've been dead on that call. So I really want to focus now in on, all right, well, we called for that Monday and Tuesday, and it happened. Now, do we see it continuing or stopping or reversing over the next few days to a week? And that's what we're going to look at today. But before we get into that, folks, what I want to do is just remind everyone that we have the webinar at InTheMoneyStocks.com coming up next Tuesday and Wednesday. And here I'm on our webpage on the website, or at least what you can see of it. And you can just go to www.InTheMoneyStocks.com and click on webinars, which is on the side over here on any page. And you just scan down right here to where it says webinars next to Apprentice webinar, which is Apprentice is really this webinar here, the techniques that we use, the methodology, and that's everything that we analyze when we dissect these charts. When we made this call on Friday for a decline in the markets and a bounce in commodities, this is what we're talking about. This is what we're looking at, what we're going to show you guys in the webinar, and exactly putting the pieces together and all the different stuff. So you can read into this, take your time, go to the website, analyze it, see if it's right for you. But really, any amateur or pro trader, this is going to be a leg up on everyone else, and you're going to probably make much more money than you would have if you hadn't taken it using our methodology. So anyways, take a look again. Webinar, a two-part series. It's Tuesday and Wednesday evening, August 26th to 27th, 6:30 to 8:45 p.m. each night. And again, you will basically be viewing our slides. We give you the slides after the webinar is completed to review them as many times as you want. And obviously, you'll call into a 1-800 number and listen to us live and be able to ask us questions as we're doing the webinar. So take a look at that, folks. We'd love to have you aboard, and sign up as soon as you can, as the spots are quickly filling up. It is next Tuesday and Wednesday evening. Okay, let's get right into the markets. Let's talk about the decline today, because we did see the markets decline. All right, let's take a look at what happened. The S&P was down about 12 points, the Dow was down 131, and the Nasdaq was down about 32.5 points. So a good sharp decline continuing today after yesterday, and it's on the heels of a continued bounce in commodities, and we're going to go over those charts today. But one thing I want to point out first is gold and oil, the two key commodities, obviously, that the markets follow closely. And what is it all tied together with? The dollar. And as of Friday, we had talked about this, and this was the beauty of it, folks, is we talked about the dollar hitting a double top there and needing to pull back and possibly even fill the gap that it had done. And we used the UUP, which is the dollar ETF index, to really show us what was going on there. And just to take a look, we looked basically on Friday at this point here and noted how it had come up and tested that high again here. And notice the extension move, okay? Anytime you have an extension move on anything, whether it's the dollar, gold, oil, or a stock, you know that you got to come in a little bit, especially after you dip down and then retest. All right, the fact that you didn't really break above it told us that this was a very extended chart, along with multiple proprietary calculations here, and that the dollar needed to pull back. And that's exactly what you saw. You saw a little bit of it on Monday and a continuation on Tuesday. And that, in turn, gave the commodities a bounce just from the pure aspect of the fact that the dollar is basically what these commodities are traded in. So if the dollar declines, they have to go up in comparison to stay pat across all currencies. All right, so that's more of a currency issue right there. In addition, you had the GLD and the USO just getting crushed. And if you're looking now, you're looking at the GLD daily here, and you can see the massive amount of sharp selling that's come on gold over the last 2 to 3 weeks. All right, and this is right on Friday where we said, hey guys, this looks like a long, and sure enough, look at this beautiful bounce up in the GLD, which is the gold ETF. All right. So again, a nice bounce in commodities today, which continued from yesterday, and you can see that nice move up in the GLD. In addition, the USO had a solid bounce today, up about $1.65 on the USO, which is the oil fund. And you can see here how we've been talking how it's very likely that the USO would not reach the 200 moving average before a little bounce like this. And the reason being is, just for one psychological standpoint, is that everyone out there, and again, this is something I noticed actually on Friday and Thursday of last week, everyone out there was posting, saying, whether it's on TV, in the media, or anywhere else, on message boards, you name it, they're saying, I'm going to wait and buy the USO or when it hits the 200 moving average. Once you start to see that, guys, red lights should go off. When you see enough of those posts, it means that everyone's thinking that way, and it probably doesn't happen. And sure enough, the last couple days here, especially today for oil, we got a nice little bounce on that oil. Now, whether or not it trades up into this resistance level is up in the air. I think it probably has a decent shot of doing that. At the high today, it got close, but it still had a little ways to go. This will be first resistance right here. All right, and on the downside, you obviously still have that 200. Now that you've had a little bounce in it, it's kind of up in the air to fall back down a little bit, but I still favor the upside on oil for a little longer here, at least to this 20 moving average, if not a little more. All right, it just seems like it's a little oversold here and is due for a bounce. Now, the GLD, let's flip back to the GLD. This is the gold ETF that we had talked about. This could have a nice solid bounce really up until first resistance right over around here where it got to today. That was first resistance, and you can see that it didn't get above that. Second resistance, according to what I'm calculating, would be somewhere in this range. Third resistance would be all the way up here, and obviously fourth, and notice how this is gap window resistance right here. Fourth would be in line with the 20 moving average currently, or gap fill right there. So there are the basic levels. On the downside, if you just want to quickly look at the downside, you're talking about first support being right here, okay, and let me draw that in so that line stays in, and obviously second support would be the lows here, or a double bottom range right here. All right, so keep those downside obviously intact and continue to view them accordingly. Now, let's talk a little bit about the intraday ES. I usually start out with the intraday moves on the market, but today I wanted to really touch on that stuff. There's not a lot to say. You're looking at the intraday 10-minute chart of the ESU8 contract, which is the September 08 E-mini S&P 500 contract, and you can see that you basically had a lackluster day, at least after the initial sell-off. Here's the initial sell-off. Here's the mid-afternoon rally or bounce. You double bottomed and you rallied off the lows to close right on the 50 moving average. Notice how, look at this trend line, okay? Right there. All right, so you're taking the trend line from really early in the morning near the highs here, connecting it to the 50 moving average, which happens to be the high of this point and right here. So you multiple times sold off from that level, selling all the way down here, bouncing here into the 50, selling off to a double bottom. Obviously, that can be looked at as a buy right here, and you get a little sell, and this would be the sell area right here as you connect these lines on the intraday analysis technique part of this. And this is just intraday analysis that you'd want to be doing if you're in that trade or you're looking for a trade. You want to connect this point, and where if this is moving up and you're long, you're going to sell right into that resistance right at that point. All right, so again, an interesting but really lackluster volume day. Again, it's August, and that's what we always say. We always talk about August, the doldrums of August, where the volume is slow, but nonetheless, you're seeing a pullback here on light volume, and we still favor the upside here in this market. Now, we called for the 2 days of downside. We're going to go to a neutral stance, and again, I repeat, a neutral stance over the next few days. There may be a little more downside in this market, but one thing I do want to draw our attention to is we're really on the cusp of this line. And remember, we talked about a breakdown below this line, and we are there. But remember, now the key is to see whether or not it holds tomorrow and what type of pattern. Remember, price, pattern, and time are 3 keys. Here you have a breakdown of pattern, but you don't have a breakdown on price yet or time, all right? And that's going to be the key here, is that we need to see everything confirming. I really want to see 5 of 6, if not 6 of 7 indicators, and we use about 6 to 7 indicators, both proprietary and technical, and I want them all pointing the right direction. Right now, you still have them pointing that this is just a pullback before another leg up, as it did pierce this line. Tomorrow, we'll see whether or not that continues to hold below the line and maybe trade lower, and that will give us a little more insight into exactly what's going on in this market. And again, right now, we're looking at the SPY, which mirrors the S&P, and the daily chart. All right? Again, this is what you want to see here is whether or not we get back above the line tomorrow, maybe move back up, or do we see continued downside, which will give us a little more inkling whether or not we're going to key levels of support. All right? And just to note here, folks, you have a support line, which we did touch today on the downside. Also, another support line here. Another one. These are obvious ones. These are no-brainers that you can just look at. And anywhere right around here would be the next area on the way down. So you obviously touched one here just about today. And then we'll see if tomorrow, do we get in this level, or do they keep it above this support and maybe push it back up? Now, from what I just heard, folks, on the news, Goldman Sachs cut estimates on a bunch of these financials. I don't know how big of a deal that will be. I do know that Lehman got killed today and is trading lower after hours, but it's only down another 30 cents after hours. Lehman Brothers, and here's the chart of Lehman, was down about $2 today, just a little less than $2. and it is down another 30 cents after hours after estimates got cut dramatically on them by Goldman Sachs, along with Citigroup and a bunch of these other players. Really, what you want to look for is just the SKF. That'll tell you everything. This is 2 times short the financials, and one thing that tells me that the financials may have a little more upside, the downside, in tune with the SKF moving up, is that really you're looking for a hit of that point right there. This is the 50 moving average. That'll be a lot of resistance. You get up to this point, then you look for a pullback. So maybe we have a little more downside. But as I said, the majority of the move is probably in there. We're going to a neutral stance on this market over the next few days until we get our bearings on price, pattern, and time. And then we can make a call maybe over the next day or two for the next few days in the market and look for that move. So beautiful call on commodity bounce. Market decline. Neutral stance taking effect now. And we'll see what happens tomorrow after Goldman cut these estimates, see how much of a downtrodden path it has. Just quickly, folks, come join the chat room. You'll learn a ton. If you want to learn technicals on trading, whether it's swing trading, day trading, it's all in the chat room. You can ask us questions nonstop all day. Join the Swing Trade Alerts and join that webinar. That webinar will benefit you guys more than you know. Take care. Have a wonderful day. We'll talk to you tomorrow.